Hello everyone. Well, yesterday was a day of reverse divergence. The picture in recent months has been one of European weakness and US strength. But that divergence was reversed yesterday when the final purchasing managers' indices for Europe were revised upwards, although they still show contraction, while the ISM index in the US came out surprisingly weak, in fact below the crucial 50 line. The figure sent Treasury yields down sharply, dragging the dollar down with them. Treasuries later lost most of the gains, the yields went back up, and stocks in the US finished higher, indicating that investors don't think the data required any major rethinking of views, but the dollar remains lower against most currencies nonetheless. The exception is the yen. Dollar-yen's turned around after a Reuters report that Prime Minister Abe will urge the nation's public pension funds to increase their investment in equities and overseas assets as part of his growth strategy. Now, what this has to do with growth is beyond me, except maybe that investing more in the stock market could push stock prices up and help companies to raise money. But overall, it is huge news. These funds are worth about over $2 trillion. They currently have 66 trillion yen in Japanese government bonds. That's $660 billion. Now, the market cap of the TOPEX index is only 3.8 trillion yen. So a shift of only 5% of their money out of bonds and into domestic stocks would be double the market cap, or would be equal to the market cap. That would just totally swamp the Tokyo market. So for them, diversification must mean putting more money abroad. That could easily push dollar-yen upwards, considering the size of the money that we're talking about here. That may be where the connection with growth comes from, a way to weaken the yen. The Bank of Japan buys the bonds from the pension funds in its new expanded quantitative and qualitative easing market operations, and the pension funds then use that money to buy overseas bonds instead. That way, the government can't be accused of intervening in the foreign exchange markets directly to weaken the yen. Great plan. If they do announce concrete investment targets for the pension plan, and the dollar yen could move substantially higher. Of course, if these guys aren't buying the government's bonds, who will? Again, it's the Bank of Japan to the rescue. Monetization of debt. This makes the idea even more bullish for dollar yen. This is Marshall Gittler, head of Global FX Strategy.FX, wishing you solid trading.